Despite the empty economic calendar and the mixed messages by Fed's policymakers, the benchmark stock indexes managed to gain more ground yesterday. The Dow Jones closed almost flat, while the other two indexes closed with gains. The first trading day was quiet but successful. The major stock indexes traded higher on the back of fallen yields in the US Treasuries and foreign attempts of the Federal Reserve to cool optimism about interest rates. As a result of a modest trading, the S&P 500 added 21 points, or 0.45%, to close at 4,740 points as expected. Futures on the stock indexes gained 0.05 and 0.2% in the New York pre-market. The S&P 500 is projected to trade in the tight intraday corridor between 4,726 and 4,766 points. Going beyond the borders could push the index down to 4,700 or up to 4,790 points. Wall Street has been extending its growth for 7 weeks in a row. It's the longest winning streak for the S&P 500 since 2017. The broad profile index is currently missing 1.2% from its historic losing high. Despite the quiet opening on a Monday, the PCE price index could serve as a strong catalyst for its jump to that peak. Meanwhile, traders are digesting the remarks of the Fed policymakers. Chicago Fed President Austin Goolsbee warned that the central bank is not committed yet to cutting interest rates in the near future. Cleveland Fed President Loretta Mester said financial markets had moved a little ahead of the central bank's timing and extent of interest rate cuts. In turn, San Francisco Fed President Mary Daly indicated the direction of monetary policy. She said that Fed's rate cut would likely be appropriate next year because inflation is improving and there is a risk that policy will be too tight. Of the 11 major sectors of the S&P 500 index, communications services have made the most progress. Increasing attacks by militant groups on ships in the Red Sea have led to a rise in crude oil prices due to supply problems, which in turn has led to a rise in the shares of energy companies. And this sector of the S&P 500 added 0.8%. In individual shares, Apple fell by 0.9% due to China's ban on the company's iPhone and other foreign devices. Already on Tuesday, futures for US stock indexes rose. The movement was rather inert and relied on the strong growth of recent weeks. Fresh macroeconomic data had a little effect on the market sentiment, but still supported the moderately optimistic mood of the stock market. Meanwhile, the market is absorbing the data on the construction sector. According to the Census Bureau, building permits dropped by 2.5% to 1.460 million in November, below market expectations of 1.470 million. Supporting stocks, the 10-year Treasury yield retested 3.9% on a Tuesday, approaching a 5-month low. In the corporate world, UPS shares rose by 1.6% thanks to activist investor Savion Capital, which acquired a 1.3% stake in the bank. Apple shares lost 0.25% in a pre-market trading, but later rebounded by 0.4% after the company said it would suspend sales of its Series 9 and Ultra 2 smartwatches smartwatches in the US starting this week. The reason is a passion to dispute our technology that provides blood oxygen monitoring on devices. PepsiCo shares slipped by 0.6% after JP Morgan downgraded the stock to neutral from overweight. Atlanta Fed President Raphael Bostic and Chicago Fed President Austin Goolsbee will speak later tonight. Importantly, Bostic, like Mary Daly, will become a member of the FOMC rate-setting committee next year. In the currency market, popular currency pairs are still discouraging dollar bills. The yen is under the spotlight in the Asian session. Its decline helped the US dollar index to cling to 202.50. However, a slowdown in inflation in Europe from a month ago gave a helping hand to the European currencies and thus pushing the coin back to the red zone. Its index sank by 0.2% to open the North American trade at 102.30. The intraday Canada for the index is seen between 102.05 and 102.60. The Bank of Japan delayed tightening its ultra-loose monetary policy until next year and refrained from any hawkish statements. So, the regulator disappointed traders who were betting on the prospects of monetary tightening in Japan. In addition, inflation in Europe, despite the fact that preliminary estimates suggested a 0.5% decline in the CPI on months, went down, and the CPI actually dropped by 0.6%. The euro and pound sterling rose sharply, so pressure on the dollar increased. The Canadian dollar continues its confident growth against the US dollar. Intraday, the USD CAD pair traded 0.39% lower at 1.3343. As for the intraday forecast, the corridor is outlined between 1.3300 and 1.3380. After rather hawkish speeches by Tiff McClam, fresh macroeconomic data proved that the Bank of Canada's governor may have been right in his stance. Canada's annual inflation rate was at 3.1% in November, unchanged and well above market expectations of a 2.9%. The result was largely in line with the Bank of Canada's signal that headline inflation is expected to remain stubbornly elevated, close to 3.5% until the middle of next year. The elevated inflation was driven by higher mortgage interest rates amid an aggressive central bank tightening cycle. Deflation also slowed in the transport sector due to a smaller fall in the gasoline prices. The cryptocurrency market is trading mixed today. Bitcoin grew to 42,944 intraday and traded 0.8% higher. The flagship crypto-like commodity gold accepted into its ranks the anxious investors who sold Binance. The exchange's native coin continued its fall on Tuesday, having lost more than 9%, as a U.S. court ruled against the cryptocurrency exchange and its former CEO Changbin Zhao for money laundering in a case brought by the Commodity Futures Commerce Commission. Zhao will pay the commission of $50 million and Binance will pay $2.7 billion as a penalty. Altcoins reacted to the news with a decline. Investors decided in favor of a Bitcoin. According to the forecast of our analysts, the token may continue to fluctuate within the intraday corridor between $42,750 and $43,200. The next targets for sellers are $42,500 and $41,900. The bullish target is $43,800. You have watched the review of the New York session. Feel free to ask any questions. Our analysts are always open for your feedback. Subscribe to InstaForex TV channel to keep close tabs on the financial markets, and see you online tomorrow.